Retailer David Jones is to close some of its 48 stores and sell property to reduce its $464 million debt following a plunge in sales during the coronavirus shutdown. In a trading update released yesterday, David Jones' South African-based parent company Woolworths Holdings told investors it had kicked off a number of strategic initiatives to strengthen the business in the pandemic and revitalise its struggling Australian brands. Brian Walker is a retail analyst and CEO of the Retail Doctor Group, and he joins us now. Brian Walker, good morning.
Good morning to you, Sandy, and to your listeners.
Are you surprised by this move by David Jones?
No, regrettably, I'm not surprised. And in fact, one way of introducing this topic is to touch on a little bit of history. In 1995, David Jones had a market capitalisation of about $800 million. In 2014, looked to there was talk of a merge and a capital value would share with Myer. And the capital value of David Jones was then about $1.7 billion, and now it sits at $60 million. So we're seeing, with David Jones, what we're seeing globally with the department store sector, and that is with the growth of online, the growth of increased competition from specialty retailers, H&M, Uniqlo, Zara, and so forth. We're seeing the contraction of department stores. And so what we're seeing with David Jones is a business that is now regrettably contracting, consolidating into some of its sites, and as you pointed out, a fairly high liability on the balance sheet, having to sell down assets to get itself back into some form of shape. But we certainly will see a contracted David Jones, and we believe Myer as well. And in time to come, who knows, perhaps they may even talk about getting back together again in some shape, or getting together in some shape.
So essentially what you're saying is that department stores like David Jones and Myer were in trouble before the pandemic.
Yes, well, absolutely. And we see it in the US. We see it in the JCPenney's, the Nordstroms, and Macy's and so forth, Sandy. We're seeing exactly the same trends. Consumers are shopping in different ways. These department store chains are large legacy networks, high-cost models, a lot of foot space, and they're just not getting the business. So yes, they were definitely trending this way pre the COVID pandemic, and that has, as it's accelerated the entire retail sector, to have to deal with it in a far more urgent way.
So how probable might it be? You mentioned the possible merger between David Jones and Myer. How probable might that be going forward?
Well, I'm speculating there, and I've been speculating on this for a while. The fact is that Australia also is overshopped. We are third in the world behind the US and Canada in terms of foot space of shopping per capita. So in other words, there's a shop for every 250 Australians or thereabouts.
So do you... Sorry, go on.
Only to say, when you look at the network sizes of David Jones and Myer, you soon realise that we just have too many department stores in the country, given the trends I've talked about. And as a consequence, there'll either be one winner over time of some description, or two smaller business chains selling bespoke, differentiated products of some description in-store and online, or they'll form some form of venture.
So you don't think in the short term that David Jones closing some of its stores will actually make it more viable going forward?
I think it's one chapter in the book that we're about to read. I think that we'll see. Well, of course, in closing stores, you do a couple of things. You certainly reduce your sales, so that's not a great sign, unless you can pick it up online or pick it up in other stores of your brand. But you rise your variable cost model accordingly. So it's a tricky position to be in. But what they do have is a large amount of debt, sub $500 million. They've got assets, and now they're moving into selling down some of the assets to meet that debt, Sandy.
All right, Brian, I thank you for your time this morning and walking us through the potential future of retail here in Australia and, in fact, worldwide. Thank you.
Absolute pleasure. Thank you.
Brian Walker there, a retail analyst, CEO of the Retail Doctor Group.